Regulatory restrictions on lending. There are certain regulatory restrictions on lending by banks in terms of RBI directives or the Banking Regulation Act 1949 (BRA) as follows. No advance or loan can be granted against the security of bank's own shares or partly paid shares of a company. No bank can hold shares in a company as pledged or mortgagee in excess of the limit of 30% of the paid-up capital of the company or 30% of the bank's paid-up capital and reserves, whichever is less, under Section 19 or 2 of Banking Regulation Act. In management of which managing director or manager of the bank is interested, Section 19 of bar 3 of Banking Regulation Act. Banks aggregate investment in shares, certificate of deposits, bonds, etc. should not exceed the limit of 40% of the bank's net owned funds as at the end of the previous year. No bank should grant loans against CDs, certificate of deposits, Indian depository receipts. Banks should deposit from sanctioning loans against FDs issued by other banks. Banks should adhere to the RBI guidelines relating to the level of credit, margin and interest rate, etc. for loans against the security of commodities covered by the selective credit control directives of RBI. No loan should be granted by the banks to the bank's directors or firms in which a director is interested as a partner or manager or employee or guarantor. Certain exemptions allowed. Relatives of other banks' directors. Relatives defined by RBI. Such loans can be sanctioned by higher authorities or the bank's board as per RBI guidelines. No additional facility should be granted by any bank or financial institution to the listed willful defaulters. In addition, the entrepreneurs or promoters of companies where banks or financial institutions have identified siphoning or diversion of funds, misrepresentation, falsification of accounts and fraudulent transactions should be debarred from institutional finance from the scheduled commercial banks. As a prudential measure aimed at better risk management and avoidance of concentration of credit risks, the Reserve Bank of India has advised the banks to fix limits on their exposure of specific industry or sectors and has prescribed regulatory limits on banks' exposure to individual and group borrowers in India. The exposure ceiling limits would be 15% of capital funds in case of a single borrower and 40% of capital funds in case of a borrower group.